Okay, so the topic of this video is counter trend trading. Now, before we get into this lesson, I want to make clear that counter trend trading is more for advanced, experienced traders. I'm just giving this for more for knowledge purposes. And it does, even this lesson with counter trend trading, it kind of helps with just trading in general. And I think it'll make a good lesson. It'll assist you, give you some more knowledge, give you some more examples of how to use market structure, how to use fair value gaps, all the stuff that we've talked about on this channel thus far. It's going to give you even more knowledge on that as well. So I think even though I don't personally like counter trend trading because it's just more difficult, why make it more difficult than it is or than it needs to be? But that's what we're going to talk about in this video. So AUD CAD, as you can see, the bullish trend on this, it has a bullish trend. The daily market structure is clearly bullish, consistently pushing up higher. So say, for example, that we're counter trend trading this. Say that we want to look for a selling opportunity. Okay. So whenever you're counter trend trading, you need to know, you got to be more precise. You got to be more nimble and you got to be more conservative. Okay. You're not looking for home runs when you're counter trend trading. Okay. If you do, you'll get burned. You'll get burned over and over and over again. You got to be very conservative. Take those really low hanging fruit PTs. That's how you got to navigate. Okay. So, and to do this, you got to know where you are on multiple time frames. So you need to know whether you are in a discount or a premium on each time frame. You got to know where that major liquidity pool is going to be. Okay, where that drawn liquidity is. You got to know all this. Okay, so on the daily chart, we have concluded we're consistently grinding up. We're bullish. Let's go down to a 4-hour chart. What's the story on the 4-hour chart? What are we looking at here? Well, clearly the trend is bullish on the 4-hour chart as well. It's clearly bullish. And it's operating within a bullish market structure. Okay, so right now we did just pull back into a discount marketplace. So again, take your most recent low to the break of that high. We're going to find 50% of that price range, right? So there is 50%. So that's equilibrium. So what does that mean? Well, even though this is bullish, like this is clearly bullish market structure, anything below that is a discount. Anything above it is a premium. So basically what that means, and if you haven't watched my video on discount and premium, just search my channel for it and you'll find it, discount and premium. Anything at a premium is expensive in the short term. Anything below it is cheap, okay? So if we're counter trend trading and we're looking for shorting opportunities, where do you think we want to get an entry? We want it to be in a premium. We don't want to be selling, shorting anything down here. We don't want to be doing that. That is not smart. We want to be getting our short positions. Again, for anyone that doesn't know what shorting is, it just means you're betting against something. So it's the opposite of buying. You're betting against it. Okay. So say we're looking for a shorting opportunity. It needs to be in a premium. All right. This is a 4-hour. This is the premium on the 4-hour. Anything above this green line is a premium marketplace. It's expensive in the short term because we took out this high. We took out that high, we're in a premium, and what's price likely going to want to do? After it takes out that high, after it takes out that liquidity pool, those buy stops, it's going to want to retrace within that range, right? So it's going to want to retrace within that range, and anything on that upper 50%, premium, anything below it, discount. Boom, we got it. Let's move on to the 1-hour. All right, so this is where it gets really interesting. So I bet some of you already know what I'm spotting here. Again, now this is where, because you need a firm understanding of market structure. That's very important. Now on the 1-hour, again, this is that equilibrium price point on the 4-hour chart. If you look at my cursor, see that green line? That's just displayed on a 1-hour chart now. Now here's how you play, here's how you counter trend trade successfully right here. And this is, I'm using this as an example, AUD CAD, but it's really the same deal on every chart. It's just like a little bit different looking price action basically, but this is how you would do it. See right here, we were trending up. So 1-hour structure at this point was bullish, consistently grinding up, consistently taking out new highs, taking out new highs, putting in consistent higher lows, higher low, higher low, higher low, higher low, and boom, what happens? Strong shift, strong move. That is a shift in market structure right there this morning. Okay, there's 12 o'clock. There's the beginning right here. There's 12 o'clock. That's the beginning of a new day. That's New York Open. Right after New York Open this morning, boom, huge shift in structure. You had a huge move lower, and that is a high probability shift in market structure. Again, search my channel after you watch this video for high probability shift in market structure. That marks off all the criteria for a high probability shift in market structure. What is it? Fair value gap created, strong close below the level. That's simple, high probability. 1, 2, 3. Shift in market structure, fair value gap created on the shift, strong close below the level. And guess what? Where is this? Where did this happen? This happened in that 4-hour premium. This happened in that 4-hour premium. Really think about that. Really go back and watch it again. Really kind of comprehend what I'm saying here. This happened in a premium. The 1-hour shift happened in a premium. Okay. So where do you think, again, where do we want to get our entry if we're counter trend trading? In that 4-hour premium. Okay. So you want to see price pop up and it gives you an opportunity to get short right there at 4 o'clock, London kill zone. It popped up inside of that imbalance above 50% of that price range. Again, let's plot that on there. See that right there? It popped above 50% of that little 1-hour price range. That price range right there. Okay. Anything above it is a 1-hour premium, and it's a 4-hour premium, 4-hour premium and a 1-hour premium. That's what you want. Okay. That 4-hour price range is, so remember, the 4-hour is operating within a bullish market structure. The 4-hour is in a bullish market structure. The 1-hour is not. The 1-hour just had that shift to the bearish side. Okay. Okay. Again, it's not 100% confirmed since you don't have that swing level yet if you were to go short right here, but it was a shift, strong shift, high probability shift. It popped back up into a premium on both time frames. It tested what? It tested a level of resistance. Okay, if you remember my video I made on high probability support and resistance, there's a level of support, broken, becomes resistance. It has that fair value. It's inside of a fair value gap as well. Whenever you have that occur, that level usually gets respected a lot more. And that's exactly what happened. Okay, see how it came up? It respected that level of resistance, and you could have went short right there inside that fair value gap, inside a premium in both time frames. Hit it into that, and what would your PT be? Well, remember, we're counter trend trading, and remember what I said at the beginning of this video. When you're counter trend trading, you need to be extra conservative. You need to be extra nimble. You need to look for that lowest hanging fruit. Okay, so you would want to take profits, preferably as soon as it comes back down into a discount. So for example, right here, see that low? What's resting underneath of that low? Sell stop, sell stop liquidity, right there. So you went short right here in a premium, in a short-term premium. A good PT would be that low. Why? Because we know there's sell stops there. And it's also back down into a discount on the 4-hour. Remember, that green line is your discount. And what is below a discount? Where is that liquidity resting in that discount? Right there. That's that key liquidity pool that you want to target. So again, you went short up here as it tapped up into that imbalance, back up into a 1-hour, a 4-hour premium. And you took profits down here because you want to be, again, you want to be very conservative. This is just a little scalp play because you are fighting the trend. But this is that key liquidity pool, and it's right down into that discount on the 4-hour chart. Makes sense? So again, this is just one example, but it's really, you can go in your charts, look at different pairs. It's the same deal. I mean, it's literally the same type of stuff. You basically want to utilize different time frames, and you want to know where you are in each time frame. You need to ask yourself, am I in a premium? Am I in a or am I in a discount? Where is the draw on liquidity? Where's that key liquidity pool that we're going to target next? Okay. And again, if you're a beginner, I recommend just trading with the trend. I don't recommend fighting the trend. It's more difficult. Again, you got to be more precise, more nimble, more careful. But that is how you would, that's a prime example right there of how you would play, how you would short a UDCAT, even though it's overall, it's still bullish at the moment. That's how you could get a short play on it like that. Just playing these little intraday ranges like this. Okay. So if you found this useful, if you did, leave a like, subscribe to the channel, and I'll catch you later.